Welcome to Savas Wealth Lab, where we talk about real world finances and encourage creating wealth fearlessly. Today, we are busting some credit score myths that are still alive, unfortunately, in 2025, and actually might be sabotaging your financial goals or the work you are doing with your credit score. So, let's dive in right away. First myth is checking my credit score will lower it. A lot of people believe if you check your score, it will lower your score. That is false. That is not true. When you check your own credit, it's called a soft inquiry. And soft inquiries or soft pulls have zero impact on your credit score. The only checks on your score or credit history that impact your score hard inquiries, and hard inquiries are when lenders like credit card companies or banks or financial institutions or so on and so forth check your credit. When you're applying for a new credit card or a loan or a line of credit, or even for a mortgage or something, for any debt, for any financing, those checks ding you a few points. But when you are checking your own credit score, it does not affect your credit. Your credit score will not go down. You will not be dinged for it. So that's myth number one. Myth number two, closing old credit cards will boost my score. That is not true at all, especially if the cards have been paid off. Actually, closing accounts, especially older ones, can hurt you by shortening your credit history. Your credit score is made up of a lot of different things, and how long you've had credit, the length of your credit history factors into it. So when you've paid off older accounts and you close them, it actually dings you a few points on your credit score because it shortens the credit history. It also shortens your available credit. So when you have a smaller credit available to you and your credit history is shorter, it can lower your credit score. So on those older cards, if there's no annual fee and the credit card company is not chasing you or requiring that you have to use them, just go ahead and keep the old account open. Only close those if there's an annual fee that you're paying on a card you're not using. Or there are instances where the credit card companies just go, well, you haven't used it for such and such a time. We are closing it. You have no options then. But other than that, if you are able to keep those older cards, especially those that have been paid off, open. Myth number three, you should carry a balance to build credit. Absolutely not. A credit balance just simply means more interest. If you can pay off your balance, pay it off, you are saving money. There is no benefit on your credit score that is so good that should make you pay interest more money than you have to. That does not make sense. What matters most when it comes to your credit score is again having a good, consistent payment history. You're never late on payments and you are actually paying off your debt. So carrying a balance just means more interest. It does not mean your credit score will go up or will be maintained. So that's myth number three. Number four, your income impacts your credit score. No, it does not. How much you make and how much you have is information that helps lenders know what amount of credit they should give you. They think you will be able to pay off in conjunction with what your payment history is, but it has no impact on your credit score at all. Again, your score is calculated based on your payment history, the amount of your credit you utilize. You don't want to use too much, you don't want to use too little. The credit mix, the different types of credit you have, the length of history again of your credit, and how many new inquiries you get. That is why when it comes to inquiries, you don't apply for credit cards too frequently because every time they look at your credit score, or look at your credit history, it actually reduces your credit score. But yeah, your income has no bearing or impact on your credit score. And the final myth we are talking about today is that paying off collections deletes them from your credit report. as soon as they are paid off. No, that is not the case. Paying off a collection, it's good that you've paid it off. It shows the lenders that you pay off your debt, you just don't carry them and run away from it. But accounts that have gone to collection stay on your credit report for at least up to 7 years. At least. So just keep in mind when you pay off collections, it will be there. The difference is that we are able to see, okay, you had an account that went to collections, but you eventually paid it off or you are paying off on it. So that is really important to note with that myth. So keep that in mind. If you have accounts that have gone to collections, pay them off. Paying them off will actually help to improve your credit score, and your favorability in front of lenders. But keep in mind it's going to be there for at least 7 years before it potentially falls off. Just some quotes. There are many myths about credit scores that can mislead consumers today. And there is no magic bullet to improving your credit score. It takes time, it takes patience, but you can do it. I have done it. You can do it. You can improve your credit score without having to shell out thousands of dollars to companies and services that will do what you can do for free. It takes time, it takes patience. It's important that you understand your credit score. Now that you know that checking your credit score does not affect you negatively, make it a habit to look into it so you know where things stand. You're also looking at your credit reports so that you can quickly spot errors, because if errors go on for too long, chances of resolving them reduce and might be slim to none eventually. So regularly checking your score and checking your credit history helps you to stay informed. You can also manage your credit score by focusing on timely payments, making sure you are reducing your debt. And again, like I've mentioned, check your credit report for errors. That is very important. You can get an annual free credit report from annualcreditreport.com, I believe. I will put the link in the description. But it is important that you check your credit report at least once a year so that you are able to spot errors. Hope this has been useful to you. Share with someone who needs this information. Like, subscribe, follow. Go forward, do well, create world fearlessly, and I'll catch you on the next video.